Sun TV saw double-digit growth in its subscription revenue, always a good sign for media organizations which have traditionally depended on ad spend. The new TRAI norms also prompted the Chennai-based group to spend more on distributor commissions and higher carriage fees in the second quarter. So can the company depend on steady subscription revenue growth in coming quarters, especially since advertisers are tightening their purse strings right now across the media space? Let's ask the Group CFO SL Narayanan, who joins us right now from Chennai, to talk about all of that and more. Mr. Narayanan, good having you. Thanks much for joining in. We'll talk about the quarter, Mr. Narayanan, but just this broad landscape and your view there. We are seeing across the board for select operators, subscription revenue looking strong, for some not so, but ad revenues for all coming off. In light of this, what is the strategy that a media organization can follow when spends on content, the cost is also increasing there?
Good morning. We have to do what is good for the longer term. Spending by advertisers keep going up and down in line with trade cycles. So right now we are in the midst of a very protracted slowdown, and that's impacting almost every broadcaster, including radio broadcasters. So it's not surprising that everybody is tightening their belts, as you just mentioned, because the economy is in fact slowing down. But we got to do what we are good at doing, which is basically investing in the right kind of content and improving our positioning in the marketplace. So I'm happy to say that in the last 4 or 5 months, we have moved our rating share in some of the more important channels, the flagship channel being Sun TV. Our ratings points have expanded from 908 towards the end of June to consistently about 1,200 in the latest month. So that's a market share gain of about 38.5%, going up to 44% in the largest piece of the South Indian television market. Similarly, in the Telugu market, we made some significant gains across the board in primetime viewing hours. So when the sentiment turns, we'll be ready to ride the wave. So we got to keep investing. Whatever be the state of the economy, we got to make sure that we stay relevant to our customers, and that's what we are focusing on. Point number 2 is on subscription. You rightly mentioned the well-entrenched players have gone ahead because end of the day, it's the product that gets you the pull factor. So we are very happy to note that our subscription revenues are very buoyant. And what is more unique about Sun TV is the remaining digitization opportunity in the state of Tamil Nadu, which, as you know, has the highest penetration in terms of television, and where digitization was inordinately delayed due to a variety of factors. We believe that at least another 5 million homes are about to go digital. So that's another 200 crore revenue upside opportunity which we are sitting on. So net, I'm extremely confident that we are well positioned to ride the wave when the sentiment turns.
Okay, I'm guessing that I'm certain that it's not possible to predict when that happens, Mr. Narayanan. In light of that, then, would you reckon that cost control or newer revenue streams, maybe stronger subscription, for example, would help a company like yours try and hold up the margin picture? Naturally, they would come off. I'm not surprised that they've come off because I can see it across the universe that margins have come off. But would companies be in a position to hold that line? Would you be in a position to hold this 55% line, or is it difficult to predict that right now?
See, actually, our margins have taken a dip, more than what was warranted because there were certain one-offs in this quarter. Till last year, our CSR spends was accounted for on a cash basis, i.e. whenever the activity was completed. Beginning this financial year, because it is mandated, we are now accruing the expenses. And also we have spent all the backlog that was pending as of 31st of March 2019. So we're carrying close to about 19 crores of a delta on account of CSR. And similarly, we had a very peculiar situation. Last year, we had a reversal of bad debt. So we had a credit of 5 crores, and this year, because of some stress in among some of the distributors, we had a provision of about 10 crores. We normally collect our dues on time. So there is a 15 crore extraordinary swing. So net, there's about a 35 crore one-off cost which is sitting in the September quarter. I must add that whatever we provided for towards the doubtful debts has all come into our kitty in the month of November. So there are no issues in terms of bad debt either. But optically, it looks like, the margins have come off. I'm reasonably sure that with all the new opportunities unfolding, OTT is a big one for us. We just signed a deal with an OTT player towards the end of September, and we have accrued the revenues from 1st of October. It's a minimum guarantee deal, on the back of which Sun Next app is accessible for the users of that OTT platform. And we've also signed a deal with a large telecom player where Sun Next will be allowed to be downloaded for all their users. So I think we should be seeing a fairly buoyant run in terms of subscription revenues, including the new digital mobile customers. So I think towards the end of this calendar year, we'll be having close to 20 million subscribers of Sun Next.
Right.
So we are utilizing every opportunity to juice the revenue opportunities. Yeah.
Right. So, I mean, you've got big plans for Sun Next. You've also laid out an investment, I think, of closer to 150 odd crores over the next 18 to 20 odd months. Let's talk a little bit more about, the plans as to how much of an incremental uptick do you see in terms of numbers coming in from Sun Next and adding to the financials that we're already seeing?
Devina, it's going to be very tough to do a cause and effect here because the behavioral patterns on OTT are very, very unpredictable. In fact, the first crop of subscribers that we saw were using Sun Next mostly to catch up on serials. We thought with our massive library, we have close to 11,000 movie titles. There'll be a big push on usage driven by movies. So I think we are pretty agnostic about the kind of content. So whatever content we'll be creating exclusively for Sun Next, over time will also be available on the regular TV channels. So at this point in time, I'm very unsure if we can do an exact cause and effect relationship on investments into Sun Next for proprietary programming and what would be this delta in advertising revenues because of that. Because as you see, even the well-established OTT players, they're all showing serials from other broadcasters as well. So it's going to be a very interesting phase as the Indian OTT experience unfolds and gains traction.
Right. And for original content, is it looking like you will have to start investing a little bit more? Is that going to come at a higher cost?
Absolutely. Absolutely. In fact, content costs will go up because I think the quality table has risen with the advent of a lot of these overseas players. They still haven't gotten very active on regional programming. It's still more Hindi, and even that is few and far between. But it will all change. But we are, and that's the reason why we invested in Sun Next. We want to be there well ahead of the curve, straightening up.
Ad revenues have been suffering, and we've also seen the international subscription revenue dip by 15% year on year. Do you see that this particular area, which is, garnering more ad revenue, is going to remain a challenge for you, considering the overall environment?
Yes, but we are seeing an extremely protracted slowdown, and which is why even on the investor conference call, we have guided to a flattish revenue growth for this financial year on advertising. Fortunately for us, subscription revenues is on a tear. So whether it is DTH or cable or OTT or the smartphone universe, we should grow by at least 20% this year. on the subscription side. So net, we will still show a revenue growth, but advertising part of the revenue mix is going to be very muted.
Mr. Narayan, just one, before we move ahead, just one follow-up question on the point that you just made on Sun Next and the investments that you're making. Matter of time before anybody who is global realizes the might of the regional languages in India as well. Local languages, regional languages, what have you. And the pockets out there are very deep. For anybody, including your group, to make substantial investments in that space, would it be a factor of increasing it to a particular critical mass and then looking for a buyer? Because in the long run, it might just be difficult to fight some of these large pocket players purely on the might of the money that they have.
I don't think I'm competent to answer this question.
No, just somebody who's a veteran in the industry. What do you think?
No,
Not just for yourself, but for others too.
No, but there will be. I mean, if you look at almost every business in this country, as and when the markets have grown, overseas players have come, and some of these people like to buy into established businesses to gain market share, and the most recent being the investment in Flipkart by Walmart. So that's something which is par for the course. It's too early to prognosticate what might be. And in any case, I'm a professional manager. I'm not the owner. So I shouldn't be even commenting on this.
Okay, let's leave that out. Let's talk about, fair point. Let's talk about the other piece, and which is the movie pipeline. I believe on the call you've already stated that the post-Diwali environment has not been very encouraging, and because of that, you expect the next quarter to be modest, but there will be some revenues that you will book as net profits, I reckon, in the current quarter from the release that you had in the previous one, because I think there's an equal number allocated for cost as was from collections in the first 4 days itself.
Correct. That was a very good movie, Namavitu Pillai. It is not a big budget movie like the earlier two that we produced, which had Rajnikant and Vijay. But this is done fairly well in the box office. So we will be recognizing a bulk of the revenues and the upsides in this quarter.
Okay. And until at least March next year, there is no other movie in the pipeline or the planning stage as well?
We have announced plans to make the next Rajnikant movie, but I don't know when the actual shoots will start. And I'm not very sure if it would hit the screens before 31st March. But the next Rajni movie is with Sun Pictures.
Okay. So in light of all of this, Mr. Narayanan, what does the outlook look like? When I look at what brokerages are penciling in for the kind of revenue stroke forecast for the bottom lines, etc., it seems to be that FY20 is being taken as a flattish year compared to FY19. Would that be a fair assessment on the top line front?
It may not be flat because, as I told you, subscription revenues will grow by at least 20%. So subscription and revenues are almost neck to neck now. So we will still grow. I'm not sure if we will deliver a flat year. And as I also mentioned that with the OTT revving up and the smartphone opportunity unfolding on the back of this deal that we have signed, I think we will post some revenue growth. It's not like, things are really bleak. And in terms of net profit margins, also there will be a growth thanks to the tax cuts that have been announced. So I'm not that pessimistic. And in any case, I shouldn't be commenting on a forward-looking statement because that's the job of research analysts at the brokerages. But all I can say is the company is better positioned than it was about, say, 9 months ago, because our ratings have moved substantially upward. And the quality of those ratings are far superior because all the gains have come in the prime time hours, where the billings are also superior.
Okay.
So I'm not so downbeat on the overall outlook. And the next year, anything could happen. I mean, all this can look like a distant dream when business confidence turns.
Yeah.
Because I've seen several downturns in this country, and whenever the tide turns, we've always been surprised by the extent of the rebound, whether it was post 9/11 or the post financial crisis in 2008. Things have always surprised us when the recovery happens. And I do believe that next year will be a lot better than this year.
Well, cross fingers for that for sure. Mr. Narayanan, I'll take a moment to thank you for joining in and giving us your perspective. I appreciate your time.
Thank you for having me.